In this video, we're going to talk about how to calculate your 2020 estimated taxes, and I'm going to show you 2 ways that it's going to be super simple to do it. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So the first way that we're gonna go over and do the 2020 estimated taxes is we're going to fill out this sheet, which is on the IRS's website, and I'll leave a link in the description at the bottom. Now, this is the way that you're gonna figure out how much in estimated taxes that you will pay. And then I'm gonna show you an even simpler way of calculating your estimated taxes, but it's really important that you know how your taxes are calculated so you don't make a mistake and you can recognize when a mistake is made. Now remember that your taxes are based on your income, so that's your revenue minus your expenses and your deductions. So you just wanna make sure that you're not calculating this based on just your revenue. So in this example, let's use someone who's earning $100,000. So at $100,000, we have to subtract 1/2 of self-employment. So what we need to figure out is our adjusted gross income. So if you have a net profit of $100,000, I'm gonna walk you quickly through the math on how to calculate your self-employment tax. So if we have $100,000, we're gonna multiply it by 0.9235. That will give us $92,350. Now we're gonna multiply this by 0.153, and that is our self-employment tax rate. So it's 6.2% for the employee, 6.2% for the employer, and then an additional 1.45% for Medicare on both sides. That equals 2.9%. So 6.2 plus 6.2 is 12.4. The 1.45 plus 1.45 is 2.9. So 2.9 plus 12.4 is your 15.3. So if we multiply these two numbers and we have $92,350 multiplied by 0.153 equals $14,129.55. We can round that up to $14,130. Now that is both sides of our self-employment tax. Now you can deduct 1/2 of your self-employment. So we're gonna divide this number, 14,130 divided by 2. So divide by 2, and that's gonna equal $7,064.77. So we can round that to $7,065. So what we're going to do then is we're gonna take all this math, that's our 14,130 divide by 2 equals $7,065. And this is 1/2 of our self-employment. That's the deductible portion. So we're gonna deduct this amount from our original 100,000. So 100,000 minus 7,065, we can just take out our calculator, 100,000 minus 7,065 is $92,935. That is our adjusted gross income for this walkthrough. So for this walkthrough, for line 1 on the adjusted gross income you expect in 2020, we can write in our $92,935. Now for line 2, we're gonna have deductions. Now your deductions are either itemized or the standard deduction. Now for most people, it's gonna be the standard deduction. And for this walkthrough, I'm gonna use married filing jointly, and that standard deduction is $24,800 for 2020. So we can go ahead and write in $24,800 right on line 2A. And then we're looking at line 2B, which is taking your qualified business income deduction, which works out to 20%. But it's 20% after we took 1/2 of our self-employment and our standard deduction. So if we subtract 24,800 from our $92,935, so we'll take out our calculator, $92,935 minus our $24,800, that leaves us with $68,135. Now we're gonna take that QBI deduction, which is at 20% of this number, the $68,135. So So we're going to multiply that by 0.2, which is 20, and that is 13,627. So line 2B is 13,627. Line 2C is just adding our standard deduction plus our qualified business income deduction. And if we use our calculator, we can just add our $24,800, and that's going to equal 38,427. 38,427. And then we're going to subtract line 1 from line 2C. So we'll clear our calculator, we'll enter 92,935 minus our 38,427, and that's going to leave us with $54,508. So 54,508. So now what we have to do is take line 3 and calculate our federal income tax. So our federal income tax is going to be based on our $54,508. So let me pull it up on the screen, and these are the 2020 tax rate schedules. And we're going to use married filing jointly, which is right here. And we got to find right where we're going to fall with our 54,508, which is right in between these two numbers right here. So what we're going to do is we're going to take our 54,508. So I'm going to pull it up on the calculator really quickly. And what we're going to do is we're going to subtract the first tax bracket. And that is our $19,750 because it's already done the math for us. So the first $19,750 is at 10%. And that math works out to $1,975. Now, everything that's over in this example, that's over the $19,750 is then taxed at the next tax bracket, which is at 12%. So what we're going to do is we're going to take our 54,508, subtract our $19,750, and that is going to be our $34,758. So $34,758 of the money that we've earned is going to be taxed at the 12% tax rate. Again, the first $19,750 was at 10%. So we're going to add all these up. So we're going to multiply that 34,758 by 0.12, and that's going to be 4,170. And then we're going to add that 1,975, and that's going to give us a total federal tax liability of $6,145. Now we can round that up to $6,146. So then I'll put in on line 4, $6,146. I'm going to skip line 5 because we're not going to go over AMT for this walkthrough. And then we're going to go to line 6, which is add lines 4 and 5. So that's 6,146. Now, if you do have credits, that will go on line 7. And in the second example, or the second method that I'm going to show you, which is much quicker than this method, it will also go over all of those credits. So I'm just going to go ahead and put a line through that. So if you do have credits, make sure that you're taking advantage of them so you don't overpay in taxes. And then on line 8 is subtract line 7 from line 6. And that'll still be our 6,146. And then line 9 is our self-employment tax. So that was that $14,130 calculation that we did earlier. So we're going to put in on line 9, $14,130. If we don't have any other taxes, we're going to go to line 11A. And this is going to equal $20,275. So we're going to add, and I'll do it for you again, we're going to add our 6,146 plus 14,130, and that's going to give us our 20,276. So I wrote 5, right as 6 here. Now this is your estimated tax liability, and figuring out how much you need to pay depends, were you in business last year what was your tax liability last year, and at least 90% of this year's taxes. But in reality, this is your estimated taxes. So you're going to need to pay this amount if this is what you actually earn throughout the course of the year. So let me show you an even quicker way to estimate these taxes and also to check your work if you were doing it by hand like we just walked through. So this is going to use the IRS Form W-4 online estimator, and you can actually still use this to calculate your estimated taxes, and I'm going to show you how. So let me pull it up on the screen. So we're going to choose married filing jointly. No one else can claim this as a dependent. We don't have any dependents for this walkthrough. We do have an income, and we're just going to choose one job for one of the spouses just to keep it as simple as possible. And then we're going to say we have no pension. Now here is where you need to pay attention, because what we want to do is we want to click on earn net income from self-employment, and that'll allow us to put in our profits from our business so we can also calculate our self-employment tax, because that's really important. You can't just put it in as a job because the self-employment taxes are calculated differently. So we're going to go ahead and check off that box and click on next. Now, did we have this job all year? Now, let's say that you didn't have another job, but we just want to use the estimator. We could just put in zeros for the W-2 side. So I can choose this and say we get paid whatever weekly, choose whatever date, and then we're just going to say that we're going to earn $0 for the year, and we didn't pay anything in federal taxes or withholdings. We're going to choose no and no. Now, this is where you want to put in that $100,000. As you can see, your net self-employment income. So I'm going to put in $100,000, and then we can see what it does. Now, we didn't pay any estimated taxes at this point. Of course, if you did, it would lower what you need to pay moving forward. Now we're going to click on next, adjustments to income. Let's just say we make no adjustments to our income. Click on next. We're going to take that standard deduction, and you can see right here what we chose before was married filing jointly. It's going to automatically show you what it is. It's that $24,800 that we did in the paper walkthrough. And then we're going to click on next, and here's where you can look at your tax credits. Now, for example, let's say you have dependents and they're under the age of 17. Well, then you can take the child tax credit, which is $2,000. So that would reduce your total tax liability. But in this walkthrough, I'm just going to click on get my results so we can see exactly what it looks like. And then I'm going to click on next, and we can see we have the exact same number that we calculated, $20,278. And before we calculated $20,276. So it's a little bit of a rounding error, $2 off, not a big deal. But what we can also do is scroll down on this page and see the math that we worked out previously. So you can see that our total adjusted gross income right here was that $92,935, which is our $100,000 subtracting one half of our self-employment. And where's our one half of self-employment? It's right there at $7,065. Then we have our standard deduction at $24,800. Then you can also see our adjusted gross income after the deductions at $54,508. You can also see our taxable income before our credits. So that is our federal tax liability. And over here, we could see the $14,130, which is both sides of the self-employment calculation. So that is that 7.65 for the employee and the 7.65% for the employer. But in this instance, you get to subtract one half of self-employment. That's why it doesn't work out to exactly 15.3% when you're self-employed. Now, you want to be careful about using any of the other estimators when it comes to your estimated taxes, because sometimes you might not realize that some of those tax estimators are only for 2019 or the previous year, and they haven't been updated to the current tax year. So using this W-4 calculator could be an easy way for you to do it, or you can use the paper version. Just two really quick ways that you can figure out what your estimated taxes should be and what you're going to pay. Now, on a quarterly basis is when you need to pay your estimated taxes. You could simply take this number, divide by 4, and then pay it. Or as things change and you can make adjustments to figure out what you've paid previously and what you need to pay moving forward, this is, again, a really simple way of doing it. So that is the way that you can calculate your 2020 estimated taxes. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.